Hey, good morning, good afternoon.
Hey Vivek, morning.
Hey, morning, Satish. Okay, you guys will have to let me know if I'm dropping in between or not because I've had some internet connection since yesterday. So I was on a call with the Xfinity folks, like just finished 2 minutes ago. And hopefully they've resolved the issues. They told me that they'll call back in an hour. I said, no, call me after 1 p.m. Pacific because I will be in a meeting. So if you see, my voice cutting in and out, because the connection works, just that intermittently it will start dropping it. And, if I'm refreshing a website or moving from one page to another, I will see it shows up as, I'm off. So I don't know what these people do. Anyway, so that got me thinking, does anyone have a Starlink? Anyone uses Starlink? Because I'm like, here, like Xfinity has got almost monopoly. So obviously they don't have big incentive to provide the best service. We have at work five of them. So I was just thinking that, these issues continue. I'll rather get a Starlink, you know. But anyway, we'll see. So far, like in last 3, 4 minutes after I got off the call, it seems to become faster, but who knows? Cool.
Good morning, Vivek. My work also used to have Starlink, but they had really bad reviews. So I ended up getting rid of them.
Oh, is it? Gosh.
Yeah.
So uh, this industry is ripe for disruption, but the problem is it needs such a big capital investment that that itself is a moat for the business. Obviously, uh, Twitter, I don't know, I still can't call it X. That is biased because it is owned by Elon Musk. Because there I do see some glowing reviews of Starlink. And my whole idea was, once my all the kids are out of a house, we will just rent an RV and roam around in US with a Starlink so that I can trade and invest and just go around. But if the Starlink is not going to help me, that plan will have to be shelved. Fred says we use it in areas where we can't get internet, also for backups. Okay, there were three different ones. Okay, cool. Anyway, looks like so far the connection is good, uh, which is great. So let's get into today's session, guys. So let me see how many we got. 13 people. Few of them will join in. Anyone joining? I don't see any name that looks new to me. So okay, so that's our usual crowd, which is great. Cool. All right, so let's okay. Ivan, tell me what did you see in the markets? Anything in your mind before we get into today's session? Anything exciting? Any new learning? Anyone? What's new? Something that surprised you, or either in a positive way or in a negative way? Come on, it's a boring week. We can't have it. We had a Tesla reported earnings, right? So when Tesla reports earnings, it can't be a boring week. Whether you own the shares or not, there is some excitement always happening when there is Tesla around.
Cybertruck sale was a surprise for me.
Oh, Cybertruck, yeah, so that Cybertruck went in for sale. And I think they're
Yeah.
also reducing the prices or giving some freebies, right? Extending the free FSD, and I think it's available at 0% auto loan. Sorry, someone was saying something?
And just out of curiosity, I was comparing the gold performance versus the S&P 500 performance over the last 10 years. So that seemed like an interesting chart. Yeah.
So gold has been ripping this year, right? So if you look at a gold is ripping this year. It's up like 32%. It's handsomely outperformed. Handsomely outperformed S&P 500. So let's compare with SPY. Comparison with, let's do SPY. Okay, let's do it on a percent basis. So almost okay, I can do percent here. If this is SPY is 452, yeah, SPY is almost 55, 54%. Gold is 51%. But this year gold has been ripping. It has outperformed SPY. So what was your revelation, Aditya?
So I was just doing this over the last 10 years, and I was using Google Finance. So I wasn't 100% if the results. See, the results. I thought the S&P 500 over a long period, over 10 years, would massively outperform gold, but didn't necessarily seem to be the case.
Let's do GLD.
Yeah.
And do compare to SPY. So we are sitting in 20, let's go to 5-year, and okay, so max will just kill us. So how do you do it for 10-year in Google Finance? You can do either 5-year.
I think I was just doing, I was doing the same thing.
There is no 10-year.
Just max and just seeing the readings from 10. But if we are just even to take the 5-year period, maybe we are in an anomaly 5-year set. Because the performance, if you see there, isn't too drastically different.
Yeah, so 5-year we are into 20. So that brings us to what, 2019 or 2019. So which you're right. So the difference is only like 20%, and but still, if you look from a little longer term, because the gold has come back very recently back to its, let's say, 10-year high. So last big high on the gold was on, I think, 2012 or something, and it's only very recently that it actually traced back to its plus 20-year. Let me do it on a weekly basis. Time frame a week. So this was what, 20. We're hearing some back. Yeah, 2011, and it's only very recently that it actually outperformed from 2011. So I guess 2024 is where all the performance came from on gold.
I posted a screenshot in the chat.
Okay, I see one. Is this
It's up 7 million selling gold. So
Sorry, can you explain this, Mike?
what I do is I day trade gold, and on the days where it's in a downtrend, I sell. On the days when it's an uptrend, I buy. And on this day, it was in a downtrend, I sold. And the account is up 7 million day trading.
Okay,
Like a hedge fund, you buy and sell.
got it. Okay, so this is specific to your account. Okay. Yeah. So it looks like to me, looking at it, let's say almost 20-year chart of gold. So for gold had almost 10 years of a kind of a lost decade from 2011. This is 2011, and this is 2020, right? So almost 10 years of no performance. And if you look at it's I think this is where it was back on 2024. So all the huge performance on the gold has coming from this year.
Yeah. So I was just thinking in terms of, and I don't know if the SPY chart, it almost certainly does not represent a dividend reinvested performance. It's
Correct.
Right. I guess if it was dividend reinvestment, then the charts would be drastically different.
Yeah, because you can add another, like say 2.5% per year. That makes a huge difference.
Right.
Yeah.
Right. Yeah.
But
No, thank you. I think that clarifies my own thought process. Otherwise, I was thinking, okay, because stocks effectively represent more risk than gold as an asset class, and just curious about how do I split in my overall portfolio, gold versus SPY.
yeah. So I mean, right now gold is ripping it because of the whole. I think IMF is saying $100 trillion of a global debt. So everyone knows that all the governments, they are screwed. They're taking so much debt. I was reading on a newspaper. So Nigerian government, 96% of the GDP goes in just servicing the debt. That's the interest payment. 96%. The numbers, especially for the emerging countries, are not that great. You know, Brazil is having problem. That's why the new, not Brazil, Argentina had its problem. That is why the new president of Argentina, he had to take a drastic measures of, slashing down the government spending to rein in this whole debt crisis. I mean, on the US side, we have already now crossed $1 trillion in interest payment per year, right? And our debt continues to increase. I mean, it's like
Yeah.
we're spending as if there is no tomorrow. The party
Yeah.
continues. So that has got a lot of central banks across the world buying gold. I was listening to, I think today morning, I think it's been covered in the recent All In podcast also. So the China that have been a big borrower of US treasuries for many decades has started to pare down its holding of US treasuries, right? So from 1.4 trillion or 1.3 trillion is now down to maybe 800 or somewhere. We can check what the latest number is. And the central bank, they've been buying gold. So China has been buying gold, Russia has been buying gold. Uh, from a central bank perspective, of course, all Indians, they love gold, so they've been from a consumer side, they have been buying gold. But this whole outperformance look at this. I mean, in 20 years, we've never seen such a steep rise,
Yeah.
right? It's the first time in 20 years that we're getting such a steep, the trajectory itself is surprising. And so we'll see how long this continue. Will the digital gold, aka Bitcoin, will take it over or not? The maxis think it would, but we'll see. But despite the fact that Bitcoin ETF has been the most successful ETFs, we still got the gold prices to perform the way they have. But that gives me interesting thought to see if the gold companies have performed in the similar fashion or not? Ideally, you would expect, but then the companies have their own business cycles. They have their own, issues around capital management, etc. So if I should just keep the comparison study here. Let's say if we have to check with the GDX, which is gold miner, let's see how they have performed. Okay. So I think GDX have a, okay, so it only started here. Yeah, so GDX kind of has an maybe underperformed than just the gold. So if we want to get an exposure to gold, I mean, there are various ways. GLDs there, of course, gold futures is there. You can do GDX, GDXJ, which is junior miner. But if you like want to track it very closely to where the gold commodity ETF is GLD is there, I think then on a future side, I guess we have a GC is gold futures. Slash. Yeah, so GC is a gold futures. Anyway, what else? Anything new? Cool. Let me
Connie
see.
paid out finally, but it paid out real late. Don't know what's going on with that.
So sorry, for which one?
Connie, CONY, high yield max dividend. Connie,
Oh,
CONY.
CONY. Okay.
It paid out real late. I was trying to find research. I got another group that I'm talking to. They don't know why it paid out so late as well, the dividend.
Yeah. Yeah, I don't know. So again, I am not a big fan of um because the dividends are sector you have to really check. These are not tax efficient, right? The TI covered in one of a previous session wherein we reviewed that the dividend is probably non-qualified. I mean, you have to check the prospectus and see if the dividend is qualified or non-qualified. But this is a yield max ETF for Coinbase, and if you look at it year to date, it is down 48%. Of course, you made a decent amount on the dividend side, but on the capital side, you lost 48%, whereas on the Coinbase stock itself is up 30%. So that's
Okay.
year to date. The Coinbase is up 30%, but the CONY has lost.
Well, what do you think about DGRO? What do you think about DGRO by BlackRock?
DGRO. What's the ticker?
DGRO.
Oh,
It's an ETF that tracks the DGRO. What are your thoughts? Just give me your preliminary thoughts and looking at the ETF. The dividends grow and the stock appreciates as well.
Yeah. So when it comes to the ETF, etc., first thing I want to look at is what's their holdings. So let's say ETF, sorry, GRO. DGRO. Okay, first I want to look at what's its expense ratio. That seems to be okay. So not mad about it. Then next I want to look at is what is its holdings? What kind of asset does it track? So it is doing equity, large caps, which is good. What do they hold? What is its holdings? Let's go to the holdings. ExxonMobil, yeah. So it's a pretty decent one from a dividend perspective, and let's look at what its dividend yield is.
Now it's not going to be as high as Connie's, but it's steady and it grows.
Oh yeah, Connie is right now. They are all riding the call skew in the options, right? Once the Fed starts to decrease interest rates, those all high dividend will disappear because right now in the market the skew is on the call side. That is why you're able to get a better premium selling covered call, and that is why over the last 2 years, ever since Fed start to increase the interest rates, we are seeing this flood of option income generating ETFs. But I want to see them once the Fed reduce the interest rate back to, whatever 1%. These won't be able to sustain, none of these Connies and yield max will be able to sustain their dividends.
Oh, okay.
It,
Yeah,
it,
let me
it
know
is
what you think
it's
about
an interest
Negro.
rate. It is an interest rate play. Why don't I
Yeah,
see the dividend yield? Okay, so dividend and valuation.
if you want to see the dividend for it, you can
Yes.
Google Nasdaq with
It's
Negro space Nasdaq space
it is
dividend.
2.18. It is 2.18. So I think I don't have any concern from looking at this. One thing which I also want to check, because I to sell options, is it optionable and what's kind of a market
Oh
it's
yeah, it's optionable. That's why I'm asking for it, because you can sell
uh,
options against it.
nah, but the markets are very wide. So from options perspective, not great tool. So what I prefer for my dividend and which is also optionable is something which is almost on the same line is ACHD. This is from Charles Schwab.
SCHD and Deppy.
This is from Charles Schwab. Expense ratio is even better. If you look at its dividend, it's almost okay. Right now it is 8. No, I think this has got screwed up because they did a stock split. So this dividend is generally around 3%, 3 to 4%, and holdings are almost, all big companies with it's a high yield dividend ETF. And when it comes to optionable, it used to be good in options because it used to trade at around, before the split, but now also it is at least better than the degrow.
Okay, so you're saying SCHD is a better buy than Negro.
Yeah, from an options perspective, if you don't have to worry about options, I think then even degrow is fine.
What is SCHD right now? Because Negro is at $50-$60 a share. What is SCHD at right now?
Right now it is 28. It used to be, it just got a split very recently. It used to be $70. I think it got split 1:3. It recently had a 1:3 split, I guess, like 2 weeks ago or something. That's why you see .33. These strike prices are all because of the recent split that they have done. Okay. Alrighty. All
So
right.
SCFD is what for bond exposure for your portfolio?
Sorry, SCHD?
Yes.
No, this is not for my bond exposure. So ACHD is basically they hold a good dividend paying companies, not too high yield because then it means the company may itself disappear, uh, and not too low dividend pay. So these holds a big good companies like Home Depots and Coca-Colas of the world that have a history of paying dividends, right? Now, the reason why I hold SCHD is, and specifically now I'm not adding SPY, but rather add SCHD is when the markets goes into downturn, right? Then
Yep.
we want to have those companies that have a history of paying dividend because it means their business, they're able to generate good cash flow. The only reason you can pay dividend is because you are generating cash. Your business is generating cash, right? So when the market is not doing that great, during those times, SCHD will outperform SPY. So right now, if you look at it, markets are already all-time highs. And then when there is a lot more greed in the market, I tend to stay back and say, instead of SPY, I'll maybe pick up SCHD. And of course, it pays dividends. So from a tax perspective, it is not efficient because it is paying dividend. So it means I'll get taxed on it. But at least it doesn't go, in bad markets, it works better than SPY. So that's the reason why I hold
Thank
SCHD.
And
You didn't tell me that they did a stock split on SCHD. I was saying DGRO because DGRO is an ETF. It was the cheapest. Well, it was the cheapest. It was optionable, and it paid a growing dividend. I didn't know they did a stock split on SCHD. You need $5,000 to trade DGRO. Now you only need $3,000 to trade SCHD. It's cheaper and it's better.
Yeah, SCHD used to be like $75 or $80.
Exactly. That's why I picked DGRO because I went through all the cheaper ones. I didn't know they did a stock split. So now
Yeah,
you can do it for $3,000 minimum. I didn't know that.
Oh yeah, they did a stock split. Let me tell you,
10th of October
11th
2020.
of October or 10th of October.
Yeah.
That's when
You
I
gotta
saw.
announce information like that, Vivek. You gotta put more bold emphasis on that. I did not know that.
Yeah.
I gotta change my whole game plan now.
Because I suddenly saw the quantity of SCHD changing in my portfolio. I'm like, what the heck happened? Then I realized, oh, they did a stock split. Anyway, all right. So, so today, let's get into today's session. So we are back in earnings season. So I want to talk about the Tesla and General Motors, both car companies, two car companies for earnings today. Next week's going to be really, really heavy on earnings. We'll look at it. What are the other companies that are reporting earnings next week? And also other topic is across, I think, the markets, lot of for whatever reason, Wall Street just isn't suddenly looks like falling in love with the retail investors and trying to bring in a lot of products for retail investors. So, private credit, private equity, trying to create an ETF wrapper on those, different kind of loans and all that. So I want to go through some of the news headlines, what I'm watching and what I'm seeing, because it is easy to get carried away by all those, but you got to do your own due diligence to understand, is it for you or not for you, right? So want to give a little bit update on that one also. Suddenly was
Before we
yeah, go ahead.
before we get into discussion, I mean, yesterday I think Israel started war against Iran. So will there be any implications of that for this week?
I have no idea. I mean, it looks like they did not bomb the oil and the nuclear facilities.
Yeah,
Right.
they just started, and yeah.
So again, the gold, if we suspect that this is going to escalate and become a big war, then some safe havens like gold will do good, and maybe Max 7, which is still considered as a safe haven because of the companies are the cash flow generating companies. That might happen. Again, I don't really will base my opinion on what might happen this week, especially when it comes to macro, because no one has been able to trade anything or do well based on macro analysis. Right? Economists, they don't mark to market their forecasts. So I don't pay much attention to macro except when there is a Fed committee talking about rate change. So if they start to bomb oil facilities, that will then increase prices, which I don't think they're doing. All right. Quick disclaimer out of the way. Anything that we discuss here is not a financial advice, so or a tax or investment. So do your own due diligence. It's don't go and trade based on, hey, we heard Vivek talking this. Okay, so before we jump in, I want to share something. A nice surprise for us was, a package landed at my home last week, and we were wondering where this come from. My wife asked me, why did you order? It says Middle Eastern pastries. She was like, why did you order all these pastries? And I'm like, no, I did not. Then I called up one of my friend, those because he's moving houses. So I thought maybe earlier he got some of his stuff shipped to my place. I thought I call him. He says, no, he did not order anything. And I'm like, what the heck? So then I had to zoom in to figure out where this package came from. So it looks like, and I did not take the permission of the person. So someone sent me who attended the options boot camp. So we had some nice sweets for ourselves this week. So thank you. At least that person was.
Vivek, we
Vivek,
lost
whatever
you for a
you
few
did,
seconds.
Vivek, whatever you did, we lost you for a couple seconds.
Alrighty. So let me share.
Back now. So what was in the package? Was it full of money? Because if it was full of money, that was my package. I accidentally sent
Dude,
it to you.
I expect you to send me a ledger, USB ledger, not fiat money. All right. Yeah. So we had some nice sweets, which we are still enjoying. So thank you. At least someone benefited from the options bootcamp. So gracias. Thank you. It's a good start to the festival season. Really enjoy that. All right. So continuing, last week there was a request to look at Accenture. Who had asked for it? I just want to make sure if you look at on a Accenture, it's actually useful.
I did, Vivek.
Okay.
Sridhar.
All right. So not sharing enable Wi-Fi. Okay. All right. So let's look at Accenture. A quick overview. I mean, Accenture is probably everyone knows, but if you've not heard or not known about Accenture, it's a consulting firm, does mostly IT consulting, also business/strategy consulting. Origin story is not that great. During Enron time, there used to be called Arthur Anderson, which got implicated into the Enron scandal. And then, they kind of had to close their business of auditing. And from there, Anderson Consulting / Accenture, came out of that. So it does provide a range of services and solutions across strategy and consulting, technology, operations. Most recently, they have come up with the Accenture song. I don't know what the heck is that. So anyway, so if you're related to IT field, they are a big IT consulting provider. So I was looking at its numbers, on Accenture in terms of their yearly numbers, looking purely from a valuation perspective. They're not trading at a cheap valuation, right? 31 PE ratio for, even if you look for a forward PE, still it is 28, which is big. PEG ratio is almost 3, right? It means even considering the growth that's being projected, still they're being priced much higher. Revenue, almost $64 billion revenue. So it's a big company. And $7.26 billion of net income. Total debt is fine, not too much of a debt on its balance sheet. I mean, $4 billion, not too big. $225 billion of a market cap. It's a big company. $13 of a free cash flow, 700,000 employees. Right? So that's looking at how great the business is on an average, because it's more of a consulting business. It's not a product business where your incremental variable cost of production is very low. Since it is more of a consulting business, you have to spend a lot more on your consultants. So operating margins, etc., if you look at it, not that great from a margins perspective. 11%, 14%. However, it's a steady, cash flow generating business. And it also pays almost 1.5% dividend yield. So 1.5% dividend yield, almost 4% of free cash flow yield. And it's been able to generate free cash flow over, look at an average is like 4 or 5% free cash flow. So from that perspective, yeah, I mean, there is not much of a growth in this company. I mean, especially over the last 1 year, it's grew only at 1%. It's a single digit growth company, if you can call that as really growth company. It's a single digit growing revenue, growing over the last 15 years. But they've been able to, maintain or cut down their cost and still able to generate a EPS, either at a revenue or slightly higher than their revenue, right? So I guess they will continue to buy back some of the shares. They've been buying back their shares like 0.5%. Are there a buyback yield? Give 1.5% of a dividend yield, right? So there you get almost 2% kind of a return coming in. And yeah, so not 2x. So from a business perspective, it's a kind of a stable business, not too exciting. No, I'm not saying that the businesses should be exciting to invest in, but depending on what kind of a investor you are, it's a steady Eddie business, right? So then I thought maybe look at a valuation to see what's being priced in, right? Because this is a business which is kind of a mature. So I'm assuming that now they will be, when the business moves into maturity phase, that time you are focusing on generating your cash flow, generating running the business profitably, right? Not in a growth stage where you can sacrifice profitability. You're in a mature stage, and the investors are looking for the steady dividend flow and basically cash flow generation, right? So we can actually look at a DCF or reverse DCF to see what's being priced in. It's a fairly valued. 10 to 12% free cash flow growth is currently priced into the stock. And analysts are expecting that they're going to grow their EPS or revenue, in maybe close to 10%. So my thought is looking at these numbers is it is a fairly priced ID consulting business. So since it's a consulting business, it's continue to need capital. You can't get a 40-50% profit margins in this one, but it's a mature business, will give you dividend, and will be cash flow positive and will continue to do a share buyback. So if you want to invest in a company which is a mature, it will not suddenly fall down. Right? If let's say the market sours on the growth companies, Accenture can give you some protection, some shelter. But don't expect it to hit it out of the park. Don't expect it to grow gangbusters. Right? So now, depending on what kind of investor you are, you may want to take your own judgment call. Okay, shares is not. If the shares were trading at, let's say, a lower price, I might be attracted to it, saying, okay, I got some margin for error and all that stuff, but shares are fairly valued. Okay. So that's and its 52-week high was 387. Currently, shares are trading at 360. So it's already trading pretty close to its 52-week high. Now, what are the future growth area I might be looking at? Is, I don't know, AI. They might move into AI consulting, but then the AI also cuts on their side, is because, hey, if I can use AI and have my own in-house developer work, become a super developer, then I will not be engaging the services of this consulting, or I will be engaging fewer services of these consulting firms. Or I'll not be willing to pay as much as I used to pay earlier, because, hey, you guys be more efficient. Why do you need to spend 100 hours on this if you can actually make use of Claude or or these Gen AI tools and do the work maybe in 40 hours, maybe in 30 hours. So AI probably will hit them on both sides. So that's my quick thought on Accenture. Any questions before we move to?
Is it optionable? What do you think
Yeah,
about the options
Accenture is
on
optionable.
ACN?
Yeah, it will be optionable. I mean, it's a you have a yeah, and it's a for $360 stock, 30-40 cents wide. Not too bad. Cool. All right. Next was Cigna. Who had asked for Cigna? Okay, so if we don't have the person in, I would then move on. Let's skip Cigna. Yeah, so I want to talk about something else, which I think I kind of hinted at last week, that I started on a new book, which and then now have the name of the book. I think someone asked me what was the name of the book. The name of the book is Engines That Move the Market. Okay. So basically, this book goes back in the history to look at how the advancements in the technologies in over last 250 years, how they have changed the market, especially the investment markets, and what used to happen in the markets during those times, right? One thing that we have known over years, over decades is as like few things never change, right? The way investors behave doesn't change much, right? Even though now we have a lot of machines coming in, but we still go through the same phase of fear, greed, the whole S-curve around the market cycle. Those things never change. So a few things I want to share with you. This was like in mid 1820s, right? 200 years ago, the dominant class for investable securities were canals, docks, bridges, because that was the main mode of transportation, right? So between 18th century and 1824, more than 60 canal companies were created, raising more than 12 million pounds, which is equivalent to $12 billion in today's money. Now you can start to draw parallels, what we are seeing in today's market, right? Of course, nobody cares about canals now. Now we have a different need. We have to transport data, and we are kind of seeing similar behavior in today's market. I mean, we have seen similar behavior during 2000. Now we are seeing around AI, right? But the problems that these canal had was, of course, the investors in these canal projects, they made money. But as with many infrastructure projects that will happen, the problem for the canal investors was the continuing need for the large capital outlays. If you want to continuously, we were talking about Comcast, right? Businesses like these, where you have a heavy capital investment, it will need, you have an initial large capital outlays, and if you have to recover that investment, it takes you need a long period of time to recover that investment. But the arrival of railways came. So railways came in, and the canals investor did not have the long period of time where they could have enjoyed their monopoly to recover all these capital expenditures that they have done. Any technology, this is the investing lesson from this, any technology that necessitates heavy capital expenditure and require returns to be earned over an extended period of time is always going to be a high risk undertaking. Unless there is some form of protection against competition. Pharma, they get protected by patents, right? Otherwise, it's a money-losing business. Airlines need a lot of capital investment, but then they don't have a protection any kind of protection. And that is why airlines, even though it's been the technology that have changed businesses and our lives in a big way, has never been a great as an investment. Right? That's Warren Buffett had admitted that, one of his worst investments were investing in airlines. Nobody has made money by investing in airlines, even though we just cannot, can never overemphasize the impact that airlines had on our lives and or on businesses. But as an investment, it's a huge capital investment when you're trying to operate an airline and you have no moat. So this book looks like was written around 2000. So then it draws a parallel around it. But I was thinking about today, where most of the companies, especially on the AI, we are investing so much, right? $600 billion of investment projected to go through till 2030 on building the capacities for the data centers, for LLM models. We have to figure out what's the moat. I don't see any moat on the base LLM model side. That will become a commodity. It's open AI. Meta has come with Llama 3.5, right? They're open sourcing it. Anthropic has its own, Claude has its own. As a consumer, I really don't care. As long as all the models, and I think eventually they'll become almost at a similar on the capability side, there is no differentiation. So I got to be a little careful. So the whole idea is these things have happened in the past, similar behavior we are seeing now, and the cycle continues. So when railways came along, right? Look at how people have reacted to railways, right? What could be more palpably absurd than a prospect held of locomotives traveling twice as fast as stagecoaches? You think of it, that's like, why would you have anyone who travel like faster than a stagecoach? That any general system of conveying passengers would go at a velocity exceeding 10 miles per hour or thereabouts is extremely improbable from a British railway designer. Rail travels at high speed is not possible because passengers unable to breathe will die of asphyxia. This is coming from a doctor.
Vivek, what's high speed?
Sorry?
What's high speed?
Oh, that's a high speed, whatever, like 20, 30 miles per hour. We are talking about in 1830s, right? When the railways came along. So again, the whole idea was any new tech, even life-altering technology like railways, because railways gave birth to Industrial Revolution, right? But it will always be ridiculed. Right? Now looking at what stuff at least we have seen over the last, I would say 10 years, EVs, etc. Now I can understand why the market never paid attention to or probably ridicule what Elon Musk was trying to do. Now I was also one of them. Okay. Come on, you can never build a business doing EVs. It's too difficult. Right? These things will never succeed. Right? Same things was said about railways. Now we are doing the same. And it is difficult for, there's another thing, right? That we always overestimate the short-term impact and underestimate the long-term impact of new technology. We overestimate, and that's why we basically are willing to overpay for everything in a short term. But in a long term, we underestimate that the change that these technologies can bring.
Chechi has to go to work.
Okay, so it looks like there was some side conversation. So no one we would have been able to think about things like Netflix in 2000. But these are the great businesses, businesses like these, which came along from an internet. And even now, I think AI will definitely change the way we work. will probably give birth to a lot of new businesses that we can't think of right now. But in a short term, I think we probably end up overpaying for it in the short term, because in the short term we think, oh, it's everyone will need this, and all companies are great on EA. Okay. So that's on the railway side. So I guess, yeah. So another interesting one was, all this from 1860, 1830s, canals were the new technology. And then when the railways appeared, canals were down. So I think the idea was here, this demonstrated another timeless lessons that investors need to learn about new technology. Identifying winners from new tech is perilous and difficult. I don't know whether it's Google gonna win or it's Microsoft's gonna win on AI. It's almost invariably simpler to identify who the losers are going to be. Look at the case of a streaming. We did not know whether it's in case of a streaming business in Netflix. I mean, at that point of time, it was only Netflix, but let's say on the e-commerce side, whether it will be Amazon.com that will survive or webvan.com will survive. But one thing which was kind of sure was, Barnes and Nobles and Borders, their life line is now limited. So it's easier to figure out which businesses are going to get disrupted than to know who are going to be the winners of the next economy. So I am a big fan of investing in picks and shovels. I don't know whether it's going to be, NVIDIA chips, or it's going to be Amazon's own chips, or it's going to be, Apple is designing its own chips. Who's going to win the AI? But we all know, doesn't care which wins AI. They all going to go to TSMC to make their chips. Maybe NVIDIA could be separated out because they got a big moat, so which they can survive. But I don't know how long can they continue to have that moat. But it's difficult because when you have so much of margin available in the business, it brings in a lot of a competition, right? So, and we don't know who will survive in the long term. Search engines, when I started my career, Yahoo, Lycos, Alta Vista, Ask Jeeves. Yeah, I mean, these were the 4 search engines that I remember using, and then none of them survived. And all we are now left is with Google. All right, but at that point of a time, I think it was easier bet to make that Encyclopedia, Britannica Encyclopedia, or any other businesses based on that, they will disappear or will be, will have hardships. Newspaper-based businesses, unless, the physical newspapers, they will face tough competition. That was easier bet than trying to figure out which search engine will win. All right. So, yeah, I mean, I've already now looking at, when the telegraph and the telephone came along, and by God, and how the Edisons was ridiculed, saying who has a need for telephones anyway. So before we diss any of these new tech, AI is all, is fad or whatever. Pick up the new tech. I think we always underestimate the long-term impact of the new technologies. That's a lesson. Thought I'll start with that. It's a pretty interesting book to go back in the history and see how the established newspaper like New York Times reacted to electricity or to telephones. Right? Now we can't even imagine any life without those things, right? All right. Any questions? Okay, let's go back to the markets. 1 week performance in the market. Still fine. We did okay. Microsoft. So we saw Microsoft going back up 2.9%, Nvidia back up. I think that the previous week's winners like financials, healthcares, industrials didn't do that good, and the money rotated back into the same mega caps or those big sevens. Apple had little weak because I think there was a news around iPhone 16. Looks like Apple had asked suppliers for 10 million fewer iPhones, and that brought down, I think, on one particular day, I don't know which day was it, but 2.5% to 3% Apple was down. Broadcom having its own spat with ARM is down almost 4% is down 4% for a week, because looks like ARM wants to cancel. They've given a notice to Broadcom that they're going to cancel their license that they have. There is it's an interesting battle to see, because ARM derives 10% of its revenue from Broadcom. So if they stop selling license to Broadcom, ARM itself is impacted. So I think this is just a arm twisting going around so that ARM maybe can extract a little more royalty. There is a little bit of a competitive angle here because Broadcom had bought in a company. Now I can't remember the name of company. It starts with N. So that company had used ARM's license, and now Broadcom basically had created their own chips and not directly using ARM. So there is some of a legal angle over there where ARM has sued Broadcom saying you can't use that company's tech without our permission and all that stuff. So interesting to see. Broadcom is trying to expand beyond mobile. They are basically trying to build PCs, chips for the PCs, Snapdragon based chips for the PCs, which will consume lower power, and that's why they were using ARM. But let's see. It'll be interesting to see the spat between ARM and one of its bigger customers. Okay. Overall, it's still fine. Sector-wise, the tech sector continues to outperform the others. The minimum return in the market this year is in energy. That's like almost 8%. Right? So there is no, if for those fund managers, and probably there were many who have sat out or have told clients not to go in the market because market had already returned 26% in 2023. And that shows up that $6 trillion is still sitting in money market fund. $6 trillion is still in the money market fund. Maybe waiting for deployment, or maybe they're happy with whatever 4% that they're getting in the money markets, right? But could have put in any of the sectoral fund, all of them have returned better than what the Fed interest rate is. I've not seen, many such years wherein every sector, the minimum return in any sector is like 8%. So this is turning out to be an exceptionally year. Then another 20% positive. Keeping fingers crossed. We got an election coming up, so anything is possible, right? But almost end of October and up 20% is great. No mean feat. So congratulations if you have stayed in the market and not try to time the market, right? Time in the market is more important than timing the market. No one has been able to time the market, so don't even try. Looking at what's happening on the other side, which is crypto side, only one noteworthy, not even a news, but at least it is starting up. A big shareholder of Microsoft has put together a proposal that Microsoft should hold Bitcoin on its balance sheet as a part of their treasury operations, right? And I'm sure this is not going to go anywhere. But the fact that this actually could make into the proxy statement and is up for a ballot in the shareholder meeting, that itself is a big event. I mean, that itself is like, you could have never thought that something that has been considered as only gangsters, only drug dealers will use it, or only criminals use it, those who want to hide from a government, those who want to do unsavory things, only those elements use Bitcoin. Now it is actually finding its way into the shareholder proposal of the second or third biggest company in the world, which is Microsoft. So if you have Microsoft shares, look into the proxy statement and you will see this proposal number 5, which tells them we should assess investing in Bitcoin as a part of the treasury operations. Of course, Microsoft board has recommended against it, but like I said, the result doesn't matter. The fact that it actually has found its way into the proxy statement itself is a big achievement when it comes to the crypto or Bitcoin specifically. And I'm sure maybe some other companies will also, the shareholders will, for other companies, might start doing the similar things. What else? Anything else you noticed on the crypto side or on the market side? Or I spoke for what, almost half an hour non-stop. Just wondering. I hope I did not put you guys to sleep.
I thought you turned us all off.
Okay. All right. All good. Looking at fear and greed index, it's still great. I thought maybe, I think it was a Friday was wherein the markets were higher, and I think it closed a little lower, but I'm still waiting for it to go back into neutral. Still we are in a greed phase, and I want to just be a little cautious. Well, and we are what, 10 days away from elections, so anything could happen. I have no idea of what could happen in election, whether mark will go up or down. All we know is we have looked at the previous historical data, right? Irrespective of whether it is Democrats or whether we have a Democratic president or we have a Republican president. I think what is also more important is what's the composition of Congress going to be. But irrespective of that, markets generally tend to do okay, has done good under both both the parties. So from long-term perspective, not really worried. If your company is doing a good business, I mean, if you're holding a good companies, we'll continue to hold them. So let's look at a portfolio updates. I bought a little bit of a QQQ. Again, partially covering the short position that I had. I still have a little bit of a short position left. And then I bought a little bit of a TLT. So I think earlier, was it Aditya who asked me is SCHD is my bond exposure? No, TLT is where I get my exposure for bond. And this is a long duration bond, 20-year plus. So if the interest rate changes, impact the longer duration bonds more than the shorter duration bonds. So when Fed start to increase interest rates, TLT had a really, really bad time. And now, my expectation is today or tomorrow, maybe day after, eventually Fed may reduce the interest rates, and then that should do good for TLT. So let's go back and look at 5-year. So pretty bad. So I think, yeah, this is where 2022, right? Fed started to increase the interest rates. TLT has been a big downturn because it gets impacted the most because TLT is an ETF that holds 20-year or plus longer bonds under it. So when any interest rate changes, longer the duration of a bonds, more is the impact on it. So yeah, as and when I find a little bit of opportunity, I'll add it to TLT, assuming that Fed, eventually, finally Fed will start to reduce its interest rate. Whether it's going to be, maybe just one more cut this year, next year 2 cut, 3 year cuts, I don't know. But I don't think we will continue to have more than 500 basis points for next 3-4 years. So that's why a big little TLT. All right, time for some earnings. Did you guys buy or sell anything? And these are just the stock buy or sell.
I put in what I bought. That's as risky as that might not be as risky as my open options. LILM. It was in the news.
Which one?
LILM. It was in the news.
So what does this company do? LILM.
Who knows? All I know is TipRanks had a you see how much I bought it for.
Yeah. It's already down 85. So it looks like this may be a lithium or something. I don't know.
No, it's not. I don't think it's lithium. I don't know. It's just one of these. It's at least $2 worth at least $2.
Okay, so
but like I said, I do open options, so this doesn't matter.
Okay, so this is a tip rank stuff, and someone trying to play on the penny stocks, way outside my area of trading/investing. Anyone else? Did you buy any stock? Anything? Any new stock added to portfolio? Or sold anything?
I was planning to buy Tesla, and then everyone knows what happened, so not buying.
Yeah, so we'll cover Tesla. And I think, okay.
Vivek, I just posted UPS. Looks like they turned around.
UPS?
Mm-hmm.
Yeah, UPS results were good. That's why I that.
Yeah.
Yeah.
And also they set a very low expectation in the last call. So
Okay, so they had sandbagged their forecast already, and now they have outperformed whatever their. So let me bring up UPS. Okay. Oh, let's look at a quarterly. Oh. Hey, why would market not like it after like continuously declining revenue over past since the end of 2022? They now grew their revenue. Finally, they grew their revenue. So yeah, no wonder market would like it. Also EPS growth was like 37%. Yeah, I'm not invested in this one, so I've never tracked it, but let's look at UPS. How did market react to it? Let's look at 1 year. Okay, yeah. Oh, it was up 5%. Then what happened on Friday? Gave up almost all the gains. Oh no, so I think after earnings would up 5%. Okay, and yeah. So I don't know if hopefully they'll be able to turn around, but you need to look at both what's the current numbers on and what's the future story is. I never bought UPS, so I don't know what's their future story is. Numbers we can look at. All right. So overall, looking at S&P 500 earnings chart from a fund strat, 78. Sorry, out of as of was it? That date was, I think, I don't know what exact this data is till date, but 138 companies out of 500 had reported results. So almost 1/3 of the companies have reported results by then, and 78% were beating their consensus earnings estimates. So markets are all-time high, and it's continued to go high, maybe because the companies are still beating their estimates. And on an average, the beat was almost 6% higher than what the street was expecting. Right. So that's on an overall S&P 500. Of course, it's got a technology. Almost 88% of the companies that have reported so far have outperformed their own consensus estimates. So no wonder that the Wall Street has also upped its target. Some of the firms are now saying that the S&P could be 610 by the year end. Right? So because they are seeing that the companies are beating the consensus estimate. Now this is around. So that was on the reported earnings, and this one is around bottom up based on year-over-year earnings growth. Oh, so this talk about the growth in the earnings, not the absolute earnings, but the growth in the earnings. So they are growing their earnings, basically a blend of actual and estimates. So actually they're growing their earnings almost to 3.5%. So you get 3.5% earnings growth or overall basis. So this is the one reason why I don't want to go short on the market, even though it looks to us that it's already up 22%. How high can it go? But we have another, let's say 60-50% companies have yet to report, and if they continue to have a similar performance number, which is like beating their estimate by 6%, yeah, then maybe market could go to 6,000 or 6,100 as some of the Wall Street have predicted. So just because the markets are at all-time high doesn't mean that it can't go higher. It all depends on how the performance of the companies will be. And so far, it's better than what we were expecting. And I think that's keeping the markets where it is right now. Okay, let's talk about Tesla. A couple of earnings. So we look at Tesla, and then I look at GM also. Meanwhile, a question Sridhar asking, anyone use Temu or Temu to buy the stuff instead of Amazon? I've not used it. I've read not so good reviews about the quality of the stuff that you get. Okay, read somewhere Temu can bring more biz to UPS, the business that they lost to Amazon. But remember, both the Temu as well as I think it's Shane. Temu is PDDs, right? They could even lose their business if the US government plugs the loophole of, which they have been exploiting, and they were not paying the taxes so far, which is whatever the minimal amount, which is $800. So the reason why Temu and I think it's Shane are able to ship at such a lower price is because they are shipping directly and to consumers, and each individual item is less than $800. So then they don't have to pay certain taxes which other big retailers have to pay. So there is already Congress is looking to plug that loophole. And if that's the case, then Temu will then have to invest basically they will have to, bring in a larger quantities and invest here for a distribution on that, which is what Amazon is doing.
Excuse me,
So
Vivek.
be
The problem is the U.S. Can't afford the labor. Technically speaking, China was supposed to not tariff any of my stuff sent and brought over because it was under $800, but I was almost always taxed or tariffed.
yeah, but I think there is
It's a global treaty.
yeah, but this whole de minimis amount free of tax is what Congress is trying to plug, and which is what these retailers were
Yeah, they're taking
exploiting.
advantage of that, but China should have done the same, but they didn't. I got taxed for almost everything I brought in or I shipped over for Hong Kong or New York City.
Yeah, I can't say anything about what Chinese government is doing.
No, but what I'm saying is the labor in the U.S. is too expensive.
Yeah, it is. And if we do a lot of onshoring, which is what, let's say, Donald Trump wants to do, we'll all should be ready to pay a higher cost for the goods. You can't have everything, don't be like we shouldn't be like a kid in a candy store that we want cheaper goods, but we want all the jobs to be done in US, and then we want the, higher salaries to be paid. Look, we can't have everything. So we have to give up something. If we want to have the jobs remain in US, then let's be ready and continue to pay the same wage. Then let's be ready to spend more, right? China has been a big factor for us to enjoy, and not pay up for a lot of goods that we have been using it, right? The reason why the inflation has been less than, or at the level that it has been for 2 decades, ignore last 2-3 years, was because of China. China has been exporting deflation to other countries. Now, if you're gonna tariff everything, as what Donald Trump says, right, we'll tariff 60%, 70%, that's fine. Then we all should be okay to pay higher prices. And we shouldn't complain at why we have to pay higher prices.
Vivek,
Hey,
China also
Sam,
closed
hold on.
Mbox.
Yeah, so let's get into the Tesla.
I'll take it.
So let's talk about Tesla. So Tesla headline numbers, if you really look at the numbers are all great, right? Revenue up almost 8%, gross profit up, gross margin, operating income was up like more than 50%, operating margins were up like 3.23% to now be back in a double digit. So all the great numbers, right? And markets liked it. Especially market like the fact that the operating margin is now back in the double digit. And this like come across company-wide operating margin. If you just look at an automotive margin, I think that was even better than this. So all numbers are pointing towards north. EPS was up like 17% to 0.62. Right? What other things? This was a record third quarter volume of the cars that they sold. Second highest quarter of regulatory credit revenue. Now, based on how you think about Tesla, it could be either positive or you can spin it in a negative sense saying, come on, they're making so much money just because of selling regulatory credits, right? Highest gross margins, as the cost of goods sold is the lowest ever, on an average at $35,000 per car. Now, Elon Musk already said that the preparations are underway for more affordable models. I don't think they're calling it Model 2, but this project is not shelved. Energy business had a record gross margin quarter, and energy, I think that even the revenue was up nicely. Cybertruck is a third best-selling EV in Q3 in the US. And these are all our Tesla claims, right? I did not go out and verify that whether it is true or not. And semi products, their semi trucks production will be starting in first half of 2026, and then the ramping will start. So these are the other updates versus consensus. Now here's a stuff to look at. Revenue grew almost 8%, but it missed the consensus estimate. So we missed the revenue, but we beat on the EPS side. Right? Quarter over quarter, if you look at a comparison perspective, 4 quarters of 2020, last, what we're looking at last 4 quarters till Q3 2023, then looking at Q3 2022, Q3 2021. Year over year, numbers look good. 3-year CAGR number look good, right? So I don't have any concern. Like I said, the great thing was the operating margin after declining for the last 3 quarters is now back above 10%, which was one concern because Elon Musk has been doing a lot of rebates and everything else, right? Now I lost account of how many times they actually reduced the prices of Model Y, right? Maybe 5-6 times. And the whole concern was, guys, how will you ever be able to sustain any margins? And when we saw the margins falling down to 5.5%, and then all the talks on the market was, hey, you're just a car company. These are the car company margins. Right? Don't tell us that you're a tech company, you're a car company. Now, if the margins are going back up north, and if they can go back to 15-16%, that will be a tough competition for everyone else to catch up with. But all other EV companies are struggling with margins. No one is actually making much money. Ford is losing money on EVs. GM is losing money on EV. Of course, they are making a lot of money on the ICE side, but Tesla could actually have create a much bigger moat if they can keep the cost under control and continue to up the operating margins. So Street liked it. Other thing I liked was the share-based compensation. 3%. Oh, sorry, 1% at 3-year CAGR, 2% over year over. I'm fine with it. Anything less than 3%, 4%, I'm good, right? So that has plateaued, which is good. And of course, the focus on cash flow has resulted in 26% CAGR over 3 years in free cash flow. Okay. So all good numbers. We can skip this. Yeah, we already talked about this. Auto revenue grew only 2%. So looking at a revenue growth from auto perspective, overall automotive revenue grew only 2%. What grew much bigger was the energy. Energy is up 50% year over year. And I think even the previous quarter, energy business had done great. So its base is increasing, plus it's also continuing to maintain the high growth. So somewhat of a time, it is still very small as compared to automotive revenue, but now it has become a meaningful part of the revenue, and if it continues to grow at the same pace. So overall outlook perspective, the energy storage deployment is expected to more than double year over year in 2024, right? They have enough cash, and of course they have a new plan for a new vehicles, which is including some more affordable models, which they should roll out. Comparison with prior quarters, we already looked at. This is where we want to focus on, because all the share price jump was based on what Elon had to say or the management has to say during the earnings call. So this is some of the commentary. He says no EV company or EV division of any auto company is profitable, which is wrong. At least I know of one EV company which is profitable. But who cares? There's no fact checking in conference calls, right? So, but anyway, so he dropped saying we are the only one which is profitable. He also dropped saying we're looking at 20 to 30% vehicle volume growth in 2025. It's not a formal guidance, but he just threw an estimate that we hope to grow 20 to 30% vehicle volume. Expect to roll out to California and hold on, I think I have that robot taxis update later. Yeah, so we'll skip that. From an FSD, he said that we expect to see 5 to 6 times improvement in miles between intervention based on as compared to the previous one. So the one number that he threw was Tesla FSD has one mishap in 7 miles, at a gap of 7 miles. And when humans are driving it, the average is some 700,000. So there is one accident after every 700,000 miles driven. Tesla has it at after 7 miles. So it is way 10 times more safer than what the current numbers are. For a semi, this is what he has to say. We have ridiculous demand for semi. Any company that doesn't adopt an electric semi will eventually lose. So the whole context was, he was saying that they have shipped some of the semis to Pepsi. And once those drivers have used semi, they don't want to go back to the other trucks, right? A lot of update on energy. Robot taxi, which everyone is waiting for. Cybercab will reach volume production in 2026. Now, we have seen Elon for years, and we know how optimistic he is when he gives the timelines. So you can discount the timelines that he gives based on whatever your experience with Elon is. So we're saying end of 2026, maybe 2027 will get it, right? He says internal estimate to have Cybercab as safe as human by Q2 and then improve from there. Q2 2025, and they'll take maybe a year and a half to improve upon there. Also have an update on robot taxi that Tesla employees in San Francisco, they're already doing ride hailing using the development app, right? But they expect to roll out the ride hailing app to general public in Texas and California in 2025. I don't know if it's going to happen or not. There's a lot of regulatory concerns, which, if you have to roll these things out. But Elon being Elon, he'll commit he'll throw some of the timelines and some of the numbers, and the markets will like it. Some more charts on vehicle deliveries, revenues up 8%, and operating margin 10.8%. After declining for a few quarters, it's back up. So no wonder stock was up 12%. This was after earnings, and then I think on a couple of days after earnings, now it is what, 260 or something, 270. So, and the analysts are now going back up and revising their estimates and on, what Tesla, could it be 300? Who knows? So after all that, this is my take. Market is celebrating that the margins are back up in double digits. Operating margins are now back up in 11%. So all the discounted, etc., that he had done is not really hurt the margin that much. Right? Now, I've not gone into the details of how he got it, but the number is, hey, it's now up 11%. Number two, Musk mentioned 20 to 30% growth. Market liked it. Cheaper car will be coming in. Right? It's not shelved. It may not be Model 2, but we will get cheaper car. I'll still be cautious. Stock doesn't make sense on valuation basis. Most of the time on Tesla, it has never made sense. So I have not been an owner of Tesla for long. But I'm not going to bet against Elon. I'm not going to. Betting against Elon is like, jumping off the cliff. So I'm not going to bet against. I'm not going to short Tesla stock. Whatever stock I have, I'll hold it in my portfolio. It's a good thing is it's a good optionable, good volume of stock. You can continuously reduce your cost basis. So I have a lot of buffer, and I'll hold the stock. I'll wait for euphoria to come down, and I don't know whether it'll come down or not. I'm not sure from a 260 whether it'll get back to 230 or not. My price point where I'm okay to add is anywhere less than 230, 240. So if it comes down where I can sell a put spread at 240 and or 230 and can get some premium, maybe I'll do that. Until then, I'll just wait. If it continues to go high, that's fine. Whatever shares I have, I'll enjoy the ride, and we'll wait to see in terms of the reality. But yeah, don't bet against Elon. Don't go short. I mean, it's right to have an opinion, but don't bet your money on that. Right? I want to make money. I don't want to be even at the cost of if I'm not right, it's okay. Right? I don't want to hold my ego saying, oh, it's too super expensive, how far it can go. That has never worked out. Don't bring your ego into your investment. So I'm not bringing in. So I'll hold it. If it goes higher, that's fine. But I'm not chasing right now. So I'll wait for euphoria to go down. And Asif says Waymo does 100K rides per week in San Francisco. Yeah. And Waymo recently got what, $5 billion of additional funding in, I think, this week. So that does mean, there is an appetite for having robot taxis. Right? So, but you're right. Waymo is far ahead of where the Tesla is right now. And I don't have much insight into how great the FSD would be that, it could completely come and overwhelm or overtake the market share from Waymo. When it comes to, yeah, I don't know. But when the Tesla stock went up, Uber stock went down, right? Because, hey, if we can get all robo taxis with much better margins, then Uber will have a good competition with a much better margin profile. So we'll see. But robo taxi should have been here in 2020. It's still not here. So I'm not betting my farm on it, nor I'm gonna short Tesla. So looking at overall, I don't think the numbers make any sense because the stock anyway doesn't trade based on the numbers. It trades based on what's the future vision that Elon has shared. And from that perspective, I think market liked it. Market liked what they saw, what they heard. We haven't yet talked about Optimus, which Elon continue to say that's the biggest opportunity consumer product. I'll wait for an Optimus to start appearing for sale. Right? So far, not even one of them exist. So that's on Tesla. Any questions? What do you think about Tesla? There's a huge of Elon premium embedded in it, and if you cannot, live with Elon as a CEO, there is no business of owning Tesla, because from a numbers perspective, shares are super overvalued. She says, sorry, go ahead.
I was asking both Optimus sort of future cash flows are being dealt with under the Tesla Corporation, right?
So Optimus will still come to, I think, Tesla.
Yeah.
Yeah. Optimus will part of Tesla.
Because SpaceX is a different corporation.
Yeah, that's a separate corporation. SpaceX is separate, but I think the Optimus will still be under Tesla, because Optimus will help them, like Asif has said correctly, right? It will help them to reduce their own cost. They can replace their labor with the robots. It will help them in their own margin profile. Now, whether Optimus can become a consumer product and can sell it to consumers, that yet to be seen. That I think we are a few years away.
And the second question, I think you asked for the opinion. I think having automated cars is the future. Just a curiosity observation, I noticed most of the Waymo cars are just Google apparatus fitted on Jaguar. So part of me wonders if I want to participate in that future vision and hedge my bets between Tesla, Google, and Jaguar, what the split should be. If Jaguar has any sort of profit sharing, or is literally Google could do the same thing on any car. So far I've not seen any Waymo cars that are not a Jaguar. I wonder if anyone else has.
Interesting observation. I've never looked at what the model of the car is on which the Waymo has its apparatus. I don't know. I mean, I think I don't know how many cars are there, but I think it's too early to even bet on Waymo versus Tesla and going to one next level, second level of, okay, I want to bet on a supplier of Waymo. I think that's too far-fetched. I wouldn't do it. I think we are still confused on who's going to be the winner. So going to the next level, I think that's probably too early. All right, so that's Tesla. Yeah, we got okay. So Naresh says Waymo can build car with other OEMs also. Yeah, I mean, whoever give them a good deal, probably they're gonna put their stuff on that car. Sridhar says, in my opinion, we are at least 3 to 5 years away from unsupervised driving. Like, use FSD, works great, love it, but needs to be watched. Yeah, so I don't know whether we'll wait until, we have a 100% zero intervention, or if you get maybe, on very specific cases, you have to intervene, will still be okay. I don't know. I mean, for me personally, I don't have any advantage of autonomous car because I can't do anything in the car anyway. I have a car sickness, so if I don't look out in front, I start to feel nausea. So even if, let's say, if we go on a tour trip and my daughter or my wife is driving, I can't read anything. I can't, scroll on my phone. So anyway, I can't do anything else. I can probably sleep. I can listen to the podcast. I close my eyes. Beyond that, I can't do much.
So Vivek, you missed the good old days of the map, reading the map.
Oh, no. I remember the day of taking a printout from MapQuest. That time Google Map was not there. So I remember taking from MapQuest and driving using that. So yeah, but nowadays, who looks at maps nowadays? Waymo has entered into multi-year partnership with Hyundai. Okay, so I think, yeah, to get those cars. 2 years, Uber only when outside as a Waymo is better almost all aspects. They don't break rules. Only humans can do that. Anyway, so I guess, I mean, it's too early to figure out who's going to be the winner, but I think we will. I don't know. We will. In my lifetime, we will have a driverless self-driving car. It's maybe a generation, not me, but let's say grandkids. They don't have to learn driving. It will just become a utility. You don't even have to own car. Just become a utility that you need to go somewhere, just call a driverless car will come in, pick you up and drop you there. Then we'll have to think, what happens when people there is no need to buy the cars. Anyway, so let's go into the other auto company, which was a GM, and see what GM did.
Vivek, I have a question for you.
Yeah.
Why are you waiting for Tesla to drop down before selling the puts? Why not sell it at now? I mean, 20 days options for Tesla at 230 is $2.90.
I want to sell a put spread. So let me see. Where is it? Right. You're saying 15th November. Actually, I'm not doing anything on the November side. So let's say because on the November, there will be a lot of stuff which is unrelated to the company could happen because it's so closely after elections. So I was looking to maybe go to December. And only thing I was saying, hey, if it drops down, I'll get a better premium. And I don't want to go naked on this one. Maybe I'll do $20 wide put spread. You get $1.83. So the risk reward is not too bad. But November is 20 days out. I have a lot of a gamma risk if I do November right now. So I'm not doing anything on November. The number 2 is, if I really look at it, right? Again, not a huge fan, but sometimes I do look at it and say a 3 out of 2 actually tells me that it's for a short-term perspective, right? Looking at 45 days, 50 days out, hey, 2 out of 3 tells me that it is overextended, right? So for example, here there is a perfect signal. You have an overextension here, and all the 3 may not be the best time to sell it. But doesn't work 100%. A little bit of an art and science. So that's the reason. I was just waiting. And for December expiration, it's still out 55 days. So I can afford to wait for another 5-10 days. Not in a hurry. That's the reason. Again, I don't have a very clear-cut scientific. There is scientific reason behind this. Okay, a couple of articles on Tesla. A more profitable Tesla is still a pricey ride. I think we already talked about it. Yes, don't bet against Elon, especially after what he has done with the Star SpaceX. I mean, he's a genius. He has its own idiosyncrasies that you have to live with it if you want to be a shareholder. But this shows you the graph of launch cost per kilogram. And ever since looking here, SpaceX entered into the race. Look at the cost. And now this has enabled a lot more companies to deploy way more satellites, which will be useful, to the overall humanity. So don't bet against that person. Even though I may have my own reservations about that person, not gonna bet my money against him.
Vivek, is there a way to buy SpaceX shares?
Look into the secondary market. So there are a few ways. One is there are some funds who invest in these pre-IPO companies, right? But then along with the SpaceX, you will get all other junk also, right? I think Fundrise is one. If you Google for it, there are many funds, especially last 2-3 years. Many of the real estate companies have transformed themselves into these funds, right? That's one way. I generally don't want to invest in a pre-IPO company anyway. The other is there are secondary share markets, like Forge is there, and I think second share post. So there are a few companies in which, let's say, if I'm a SpaceX employee and I need liquidity, and if SpaceX allows to do it, I can actually sell my shares to someone else in these secondary markets, wherein you can buy it from them. So I know one is Forge. It used to be called something else. So there are these secondary marketplaces where you can go and buy. So these are the two, three ways. Like okay, a Forge IPO. Looks like there is a Hive. Now they actually keep sending me the emails on what stocks are now available, right? They have Anduril, OpenAI, XAI, Anthropic, Waymo. So these are I don't know if these are really available or not. So you can look through these ones. So these are the ways in which you can invest in non-public companies. Okay. All righty, let's look at GM. Quick look on GM. All numbers look good. Revenue up, gross profit up, margins up, net income almost unchanged. Slightly down, doesn't really matter. 25 basis points. Operating cash flow up. EPS is up. Number 2 in US EV sales, 32K units delivered. Number 2 is far behind number 1. So the gap is huge, right? What GM has been doing is buying back a lot of shares, because if you recall, over the last 2 quarters, they mentioned they're gonna, tone down, pare back on their EV investments and will go slow on EV, because no company has been able to make much money on EV. Even Ford said the same thing. So what do they do with the cash flow that they have? Yeah, return the cash flow to the shareholders, either by means of paying higher dividend or by buying back the shares. So they reduced their share count by 19% year over year. That's like buying back 1/5 of the company, right? It continues to be leader in ICE trucks, SUV. Total vehicles delivered is 1.5 million. A bit down by 0.1 million because of challenges in China. China continues to be a tough market for them. The revenue is down from almost 8 billion to 4.5 billion. A lot of competition in China. Even Tesla has its own. Chinese EVs, especially EVs, are very competitive, and looks like even on the non-EV side, there's tough competition in China. Wholesale vehicles down from 590K to 372K. Equity income, this is from the Chinese business. From making profit of 6.2%, it turned into loss of 6.3%. So overall, China has a big impact on a GM. Also, the fact that number 1, competition. Number 2 is Chinese economy. Right? People are not spending. So that has hurt a lot of, I think all US-based companies who derive substantial amount of revenue from China. It was a beat on both the revenue as well as EPS. Capital allocation, they continue to buy back the shares and maintain a dividend. I think they can continue to maintain a dividend for the long time, because the payout ratio is less than 5%. So that's I have no concern that they will not pay a dividend in future. Guidance, rather than getting the details, all you need to know is they raised their EBIT and EPS guidance again. They did it in Q1. Whatever they had guided at the end of 2023, in a Q1 they raised it. Q2 they raised it. Q3 they raised it. So for the last 3 quarters, they've been raising their guidance on EBIT as well as on EPS. So market really like it. All the trends are okay. So the stock was, from a trend perspective, all okay. Stock was up 8% on the double beat, right? You beat on revenue, you beat on the consensus, plus you also raise your guidance. Market really loved it. Stock was suddenly jump up to 52 or something. It'll go back and look at it. Yeah, it's closed at 9.8%, almost 10%. up after the earnings, close to 49 to all the way to 53, or right from 48 to 53. So I had a good jump in the market cap. What to come in future? This is what they want to tell to the investors. We will remain disciplined on inventory management. Introduce compelling and appealing vehicles that are more profitable. So focus on profitability. Expect positive EV variable profit in Q4 of 24. Again, still the variable profit. On track to achieve our net 2 billion fixed cost reduction program. And this is what I like it. Continue to consistently return excess free cash flow and expect to be the shares to be under 1 billion number of shares in 2025. So currently there are 1.31. So I think, and in Q3 2023, it was 1.39. So from almost 1.39 billion, they've reduced it to 1.13 billion, and now they're going to buy back and reduce it to $1 billion. So here's my overall thoughts. EV in China is a tough, and anyway in EV they are far behind Tesla. It's still the biggest fish when it comes to ICE, right? But it's the biggest fish in a shrinking pond. The business in a long term may be in a secular decline, right? Because EVs are gaining traction all over the world. In China, for the first time in the history of China, there are EVs were more than 50%, not EVs, NEVs, because China has got EVs and hybrids and, so the new energy vehicles, NEVs, were more than 50% of the overall vehicles sold. So it is, at least China is one of the biggest market, or maybe the second biggest market in the world. And there, the ICE are now less than 50%. Right? So it is a secular decline mode, but GM is the biggest fish. Until they find a new growth engine, they should continue to return cash to shareholders, and which is what they are doing. What do you do with the amount of cash that you're generating? If you can't find a new growth engine, better return it to shareholders. So I'm gonna keep, small coffee can quantity in my portfolio, not buying it at whatever 50, etc. But if it is lower than 50, 45, I might sell a put over there. But you don't expect it to be a big growth company, but it will continue to pay you dividend, buy back shares, and generate market returns 10, 12, 13%. I don't think that's seems to be what GM is currently at. So that's on GM side. Maybe if they find out how to start making or able to sell their EVs, yeah, then we'll talk about it. Right now it's a big fish in a shrinking pond. Satish, I have two questions. There are a lot of literature on entering, very less on exiting. So I already talked about this, right? When to sell. Was it last week or week prior to that? Second question.
Yeah, probably. Okay.
Yeah, so we covered that whole section on when to sell and what's my thought process about to sell. How to identify multi-bagger stocks. Multi-bagger we only come to know in the hindsight, because you have sold a good business that you identified and you sold it because you made 3x, then it can never be a multi-bagger for you. So the idea is that's why I want to focus on looking at a good businesses. So that is why I've now started looking at this very religiously, high quality business metrics. What's the gross margin, return on invested capital? More than 25%, that's great. How are you in a capital allocation? What's the profitability? Does the business have a secular tailwinds, right? Numbers tell me everything about past. Are you going to grow in future, right? Is it a capital intensive business or not? Are you generating cash flow or not? So I look at these metrics and then see, is it a good business? If it is a good business to own, then I'll buy it. But then to get to a multi-bagger, you need to go through the, drawdowns of 70%, 80% and all that stuff, right? If you sell before that, you'll never become a multi-bagger. So that's a concern.
Got it.
There is no secret sauce. It's only about buying a good business and then holding it as long as the business continues to perform. And don't get scared by what you're seeing in the market. Naresh says GM option volume has been declining for some reason. Is it? Okay, so I don't have a volume here. Volume open interest. No, I mean, this is a decent. Okay, maybe on the put side, not much, but on the call side, I still see, sorry, volume. Yes, yeah, but you have a decent open interest. So it is still, good option volume because looking at a bid-ask spread, it's not too wide. Right? Not too wide. 4 cents, 5 cents at 30 delta, oh sorry, 40 delta, that's fine. So that's GM. What else? Okay, we hit our 2-hour mark and looks like what else we want to talk about? Let's look at next week earning. Next week going to be a very busy week. A few things that I'll be watching is Transmedics. Ford is going to report earnings. Cadence Designs. Again, Transmedics has been on my radar for long. It's in a pretty unique business. Not for long. I mean, I've heard about it earlier. So they've been growing. The stock has been growing gangbusters. I think the revenue also has been growing well, but they kind of bought an airline and all that stuff. And the margins are not that great. So I just still want to look at and wait for it to become a better business from margins perspective. Tuesday, we got SoFi, PayPal, Google, and Snap. Wednesday, Microsoft, Meta, Coinbase, and Starbucks. Then Thursday, Uber, Amazon, Apple, and Intel. So given the fact that we got a 1, 2, 3, 4, $5 trillion companies, at least $1 trillion. A couple of them are more than $3 trillion. 5 big tech companies are reporting results. Market could go anywhere. It could be more volatile. Then it all depends on how these big tech companies are reporting the results. So I hope they'll be ready for some fireworks. Right? I don't know whether it's gonna go high or low. I have no idea into what the earnings of these companies will be. Even if I know earnings, you still don't know how the market will react post earnings. So, but yeah, it'll be interesting to see. Next week gonna be a very busy week from earnings perspective. Okay. Ford is a lost cause. I mean, we'll look into the Ford next week. I think it's in the same boat as GM, I guess, returning capital. And when it comes to the EV, yeah, I think both of them are kind of not doing much. Ford also had to shelve its EV company that they bought in, right, with the collaboration of Volkswagen Argo. And I think now they have separated out these two companies to save cost. But we'll see. DLR is up. DLR is which one? Is it the Dollar Tree or Digital Reality?
Vivek, do you see any future for Rivian?
Digital Reality. Rivian needs a lot of money. I mean, as long as they can continue to get the money. I mean, they recently got additional funding from Volkswagen, right? So they they will need a lot of funding
Something. But that was pump and dump. Like stock went $8 and went $17 back to $10.
yeah,
So
they still have to perform. They need that funding. So I'm not buying Riven right now. I want it to move to a stage where it can consistently, at least, not dependent on outside funding, make at least operating profitability, right?
I see,
Operating
because
profitability. Forget about net profit margin, but at least on automotive side, if you can become operating profit, then at least you're on your own. Right now, it needs the crutches of external investors.
two stocks I have doubt, Intel and Boeing. You were showing some slide.
Yeah, let's talk about it. So sometimes they've asked me,
Yeah.
right, what's my thesis? And my thesis has always been too strategic to fail. So Wells Fargo had a big article around why Boeing and Intel woes are America's too, right? Which is basically the same thesis. It's too strategic to fail. Right? We have seen too big to fail banks were rescued by we couldn't let JP Morgan fail, Bank of America fail. There was a big article on Wall Street on why these companies are too strategic to fail. Again, the gist is the same, right? There is no other big company in America that can manufacture semiconductors. TSMC is the biggest one. Global Foundries, maybe, but very small scale, right? Intel is the only one that had a know-how. Somehow it had fallen behind TSMC, and we know the reasons. We talked about it earlier, but no one else has expertise. So if we want to be self-sufficient in chips, that we don't have to depend on a Taiwanese company, given the geopolitical tensions, Intel is the only game in the town. Boeing, same stuff. There are only two companies, Airbus and Boeing. China is coming up with, and I think now some of the customers, some of the airlines outside of China are now starting to look at China as a viable supplier, because Airbus have its own issues. They delayed some of the supplies. Number two is Boeing. Less I talk about Boeing, better it is. Every week they have some issues, right? But what else? There's no other suppliers. Where else will go? They still have a lot of backlog. Despite having so many issues, they still have a lot of backlog worth, years of backlog. Will we go to China? I think it's early this year, they are now selling it commercially. Chinese airlines are now starting to buy the planes manufactured by China. I forgot the name of the state-owned enterprise, but that's going to be the third one. Maybe some Asian countries will be okay to buy those planes from China. May not be Western countries, may not be, given all the concerns around espionage and state and all that. And number two, there is no history, right? They only started selling it commercially for a year. So you never know how it will continue to perform 10 years, 15 years, 20 years down the line. So that's exactly what it says. It's a national security dictates that US maintains some know-how in making aircraft in semiconductors. One line is a summary of, if you want to be an investor in Intel and Boeing, this is the only reason. Business-wise have been numbers-wise very pathetic numbers. That's why it's reflected in the share price.
do you think Qualcomm will buy? What is your opinion? Intel.
That might be a too big to chew, right? So Qualcomm is already having its issues with ARM. They are having a fight right now with ARM. Number two is, given the regulatory concerns, right now, this week, they didn't allow two luxury handbag companies to merge.
Yeah.
It'll be a big distraction for, sorry, you're talking about, yeah, it's going to be a big distraction for Qualcomm right now, given, first
But they want a CPU something, and Intel is doing something with CPU. That's where they can get rid of this ARM licensing issues and all that.
But if Intel CPUs were so great, then Intel would have been in a position where they are, right? So CPU, Intel is getting eaten by AMD on the CPU side. Mobile side, it was getting eaten by ARM. And on high performance, which is GPU side, it was getting its lunch eaten by NVIDIA. And that's the problem that Intel had. If Broadcom takes it over, how are they gonna change that future? I'm not able to understand. And so why you have to now engage right now in a environment where the administration is not even favorable to all this M&As happening. Maybe after the administration has changed, then we will see. Otherwise, it could be an unnecessary distraction right now. Okay, so we'll come to the other stuff maybe next week. Any other questions? I can hang on for 10 more minutes and then we'll call it down. Asif.
One last question. Is that planned war, Iran versus Iraq this weekend?
Iran versus Iraq? What's happening? What is happening in Iran?
Israel. Iran and Israel.
Oh, Israel. Oh, let them do whatever they do. There is no investment thesis I can build based on that.
The US market will not get affect anything because I saw that on Friday, the volatility went up 10%.
Yeah, it may be, right? So short term, it may be depending on maybe your like Lockheed Martin and Raytheon, they probably might go up, and then who knows? But you can't just invest based on what's going to happen in the short term. And maybe we have already overstated that the impact of it, so the share price are already paid up. Who knows? So I'm not going to make any change in my portfolio based on what's going to happen in the war. Do I have exposure to oil? Yeah, I have a short put on XLE, which I again rolled it this week. I rolled it to November. I had it for November. I rolled it to December. Right? And if there is some concern on oil, yeah, I'll close it profitable, but I'm not going to add any more. That was the one which I've been rolling it. DLR is a digital realty. It's a, and I think this is 1 year. Wow, that a huge jump, 10% after earnings. I don't know. So I think that earnings did the favor for them. Can bailers provide better S&P returns or just keep the better than S&P 500, just keep the company afloat? Yeah. So the question is, if you buy the company before the bailout, right? If you've already bought it at $300, let's say Boeing, and you bought Intel at $30, $40, bailout is not going to make any difference for you. But given the fact that Intel, actually I have a bullish position on Intel, given the fact that Intel is trading at, let's look at Intel at valuation, this is NTC. Which is like, it's given up for almost dead. Look at its price. That even if you sell all Intel assets, market is assuming that Intel is not even worth the amount of assets that it holds in its balance sheet. Forget about any intellectual capital, etc. Right? So have you given it for debt? And is there, again, this is one kind of investing. This is called like a cigar butt investing, you know. And if it continues to be, you know, government won't let it fail, then maybe it'll turn around. So I'm not saying that you should have bought Intel over here. Here, maybe there is some justification. So I do have a bullish position. I hold Intel stock, plus I do have a bullish option position on Intel. Right? And in that case, one good positive signal from Intel, yeah, it will perform better than S&P for that particular instance if you buy at this place. Right? But we need to have that a trigger for it to perform. So, but other thing that you should be aware of is turnarounds not always turn around. And Intel is a big company, so don't go and bet farm on it. But yeah, I found that it was trading at a very cheaper valuation because market has lost all hope on Intel's. Someone asked about a commercial reality current situation. I don't know. I've not looked into the office REITs but all I think some of the commercial REITs have done better. The stocks have done better, but I did not dig deeper into what's happening on the commercial real estate side. I don't know if Jay is still here. Jay is a realtor. Okay, so it looks like he dropped off. But okay, I'll take a note of it. Maybe we'll see if I can get some updates on the commercial realty. If you have a particular stock, do let me know. Maybe we can bring it up for the next time. DLR. So what did they do? What did they report? Okay, CB Richard Ellis, CBRE. Again, real estate companies, not in my circle of competence in terms of evaluation side. But I'd say it's a different, the capital investment, how they fund it, because all of them basically have a heavy loans and all that stuff. So not only you need to understand the revenue, you also need to understand what kind of loans they have, right? When do they loans are due and all that, when they have to roll, and if they renew it, what's the current interest rate and all that. So it's a little more complicated than understanding the statements of the real estate companies that I don't generally focus on real estate. When you're looking at REITs, best thing is to look at a funds flow from operations. And REITs, if you're buying it because they give back all the profits. I think as per the IRS, 85% or 90% of the profits, they have to return it back. So get a nice dividend. That it could be a dividend play. But otherwise, understanding, I've never tried to look into this. Aditya says, notice you usually have a Bollinger Band. Are there any circumstances when they are useful? Yeah, in some cases, if you see they are like, if it's a, like there is always not a rocket science. Always, let's say it's way higher than, if you really look at the history, in hindsight, it does tell you that if it goes above the higher Bollinger Band, maybe there's a little bit of a correction over there. So from that perspective, you can draw some conclusion. But it's not guaranteed.
Okay.
There is no one indicator that will always tell you what's going to happen. So generally, what technicians do, they'll have one main indicator, then they'll have a couple of a conforming indicator, and then generally most of the folks work with 2 or 3 indicators to form an opinion, right? Okay, Bollinger Band is telling me this. What's my, let's say, RSI is telling me, right? Or pick any other, right? So I don't think anyone rely on one single indicator.
Right. Thank you.
Capital One marriage with DFS. Oh, that's their, they took their car business? Discovery Finance. Oh, they actually acquired. Why I missed that? They're gonna acquire the whole Discovery. Is that been, has regulators approved it? Regulators nowadays are like, they're not approving anything. And this was shown up in the merger. I think it was what, Capri Holdings, and who was buying them? And the stock was down like 50% because Justice Department say they, yeah, yeah, because the Justice Department say they're gonna block that one. So stock fell down 50%. So I'm not gonna, you know, do or trade anything based on this whole merger arb stuff. Alrighty, I think even the internet connection is telling me that it should get off and we hit our time also. So let's call it a day. I'll have to call back the whole Xfinity guys to tell them whatever they did really didn't work. And hopefully we'll have a better connection for our next meeting. Diwali. Oh yeah, Diwali is next week. Hey, happy Diwali to you as well. And to all those who celebrate, we're gonna have some, oh, when is it? Or next, it's okay, second, right? So Diwali is midweek, so that should be fine. So I should still be here on, we will still have our session then. Alrighty, thank you everyone for joining in. Sorry for all the internet connection issues. I don't know what's going wrong here, but hopefully we'll have a better one next week. Bye-bye.